right? Lastly, guys, we're going to talk about why gold's downside may be limited, all right? In the midst of the Middle East conflict, in the midst of these recession fears, I think that could be a catalyst to ultimately put the brakes in as far as the downward trajectory of gold is concerned, all right? And those are the headlines that I'm going to unpack today. So yeah, all right, I think we can get straight into it, guys. I'm going to look at a chart. You know the protocol. Let's look at the US dollar index for some context, all right, to guide some of these headlines that I just mentioned. I don't just want to talk. I actually want you guys to see a visual representation of what the hell I'm talking about, all right? So yeah, let's get straight into it. Dollar index 4-hour chart. Not much has changed since yesterday, all right? I'll give you guys a few minutes, not a few minutes now, 30 seconds. If you want to follow along, please open your dollar index chart, particularly on the 4-hour time frame, and then we'll get into what the price action is saying, all right? Shout out to Uncle Dollar. You're just a few moments late. I'm about to get into the technical analysis. You didn't miss out on much. It's just the headlines, all right? So yeah, dollar index, guys, not much has changed, all right? We're still looking at the same pattern from yesterday, all right? And as far as the downward trend is concerned, it is validated by these corrective waves that we're seeing and these impulsive waves in between the corrective waves, all right? Now, we've got a bounce over there, and I think that could be a catalyst for our pullback, all right? So in as far as the pullback is concerned, we could have a dip below, hitting above, and then melting all the way down again, all right? This is the downside scenario that's in line with the recession fears, that's in line with a slowing economy, that's in line with interest rate cuts, all right? About 106 basis points priced in for 2024. So in as far as the interest rate outlook is concerned, it's pointing towards a weaker dollar. And as far as recession concerns are concerned, it's pointing towards a weaker dollar, all right? So that is the weaker dollar scenario. The scenario for a stronger dollar is as such, all right? We might find a move back down like that and move on up, back down again, hitting that confluence area before ultimately resurfacing back to the previous lower high, which is represented by that move right over there. All right, we could find that, and that might be the first target for a pullback in that direction, all right, giving us consistent higher highs and higher lows back until we get up into that region over there. All right, let's just see the comments down below, guys. All right, shout out to Ray JT, says let's keep subscribing to Mr. YC Sir's YouTube channel, please, ladies and gentlemen. I beg, the more you guys subscribe, the more content I will generate, all right? Right now, it's almost of no use creating content because y'all don't follow me, all right? So follow me on YouTube, and then I'll run up the content, for real. I will do more of this. I will do live commentary when there's high impact news. I'll also do some watch-alongs as well when there's high impact news. So just to give you guys some context and some commentary as these high impact news develop, so that you guys can kind of have a better, how can I put it, a better understanding of how to tackle these events. So yeah, I don't have a link for you, but you can just search me on YouTube under this handle, guys. All right, it's the same handle as my Instagram one. It is exactly the same. Mr. YC Sir. All right, if you just type this in on YouTube, you should find it, all right? All right, it's my word. This is, I honestly think it's going to break that trend line. I don't think it will make a third touch. All right, I see. All right, I see. Do we have economic data that backs that, though? So I'm with you on that one. I'm with you on that one. But it must be supported by some fundamentals. And I believe that if we get a lower initial jobless claims and CPI is lower as well as PPI next week, or higher rather. If we find that PPI or CPI is slightly higher next week and initial jobless claim is low, then I think that scenario you're talking about could really be feasible. All right? Just remember, guys, we're going to need a catalyst. For all the moves that you're projecting on these charts using price action patterns, technical analysis, it's all good and well. Just remember, you need a catalyst to back up that information. All right? Mr. McShane says, I believe we should just wait for price to reach the trend line and see how it reacts. That would not be a bad idea, bro. That wouldn't be a bad idea either. I'm actually staying out of the markets right now. I'm waiting to see what happens. Do I sell into all of this weakness or do I buy the dip? But I need more information before I can do that. So that's just my chat on that one. Mohammed says, how's the euro looking? Euro is about to break, or looking like it is. It pulled back off of that 7-month high. We hit a 7-month high on Wednesday, and since then, retrospectively, we've just been pulling back. I think I can afford to just almost have a glance at this. Let's see on the daily. All right, let me just show you quickly for Mohammed, guys. I don't usually take requests, but I'm in a good mood today. All right, we're looking at the Euro USD on a daily time frame. All right, on the daily, we've got that level over there connecting with that level over there, connecting with that level, connecting with that level. All right, so we've got sort of got like an asymmetrical triangle. We've got the uptrend over here, we've got the downtrend at the peak. All right, we've got that hit over there, that bounce over there. We're in the midst of either a rejection or a break above the structure. So it is literally decision time when it comes to Euro USD. We are sitting at a 7-month high, and it is a key level that has sell side interest. All right, you're going to meet a lot of sellers here that are going to try and drive this price down in line with that horizontal level of resistance and in line with the trend line that's coming down over here. So that's as far as it looks in as far as the euro is concerned. All right, we still have a lot of bullish momentum, admittedly. We're coming from that level where we bought Euro USD on the back of that lower NFP data. So, and as far as direction is concerned, it is still bullish. It remains to see whether that is a perfect opportunity to sell or whether it will break above. I think we need to wait for structures to confirm. If I'm going to do some technical analysis for you real quick, damn, I'm off ramping for real. But we're looking at that area, all right? That's an area of key interest. Should price break below and come back above, then I think we're still bullish, all right? But should price break below and fail to break above the previous lower high again, all right, that would be this level, all right? If price breaks below here, comes back into the region and fails to break above there, then it's a perfect opportunity to sell and cover all of the space over here. But if we find some support in that area, then we're definitely making a move up back to the upside, breaking above that 7-month high. Mohammed 3125, that was for you, my friend. All right, I don't usually take requests, but you asked nicely. All right, shout out to you, Mohammed. Let's see, did I miss out on anything? Salbi says, I hope I get late. Not too much, bro. I haven't gone into the news yet. All right. Let's see. All right, let's get straight into the news, guys, before I sidetrack a bit too much. Let's get into some news. All right, guys, so it's midweek, Wednesday, and we see gold prices slipping by 0.2%, and that's as the bears continue to drive the yellow metal lower. All right, Fenze, Bito, I'm talking about gold right now. All right, now on the dollar front, we've seen some demand coming in yesterday as markets kind of took a breather because of that positive U.S. economic data that we got on Monday in the form of that services PMI data. All right, now after seeing off that services PMI early in the week, I think that now all the attention shifts towards the further economic data that we have in this week, particularly the upcoming initial jobless claims data, and traders are really going to use that to gauge the Fed's next move. I think the question that needs to be answered right now is whether we get 25 basis points in September or we get 50. We're definitely getting it, but now the question is moved to, are we getting a 25 or a 50? Because either one of those two things have an impact on risk assets, all right? I think a 25 is not enough. It'll still be underwhelming. It'll still be positive for risk assets in the short term, but the weight of the expectation, all right? We've been expecting interest rate cuts in September for the past 2 months, all right? So if we get a 25, it's going to be an underwhelming response and it'll be negative for risk assets and the dollar will still stay afloat. However, if we do get a 50, then I think that the dollar will continue to melt, and that could be what begins to put a floor under risk assets, and that's when we can really buy the dip. So it's about determining which probable outcome is there going to be between 25 and 50, and using that information to try and get in before the interest rate cut comes, because by the time it comes, it's too late, ladies and gentlemen. Markets buy the rumor, sell the fact. So we need to try figure out what is the rumor right now, okay? And that's why you're here at the Daily Pulse, so we can answer those questions, all right? Shout out to Molefe, all right? Saying that your lives are legend. Thank you, my friend, all right? Let's unpack the week so far, all right? We're seeing a rebound in U.S. Treasury yields, and that's on the back of that positive data that we got in the PMI front, which has translated towards positive movement in the dollar and downward pressure on gold since, well, Monday, I guess, all right? Feeding through into yesterday and this morning, and that's on the back of that pocket of resilient U.S. economic data, all right? What I think that PMI data has done for us this week is that it's prompted markets to reassess those recession concerns, all right? And I think looking ahead to the fundamental outlay, the downside risk in gold may be limited, guys, because of two things. The Middle East tensions that we have, which are unresolved at best, all right? As well as the lingering global recession concerns, guys, because as you know, when there is economic uncertainty or times of geopolitical tension, markets are going to flood towards safe haven assets. And if any fears that I just described, one of these two fears, if they come to fruition, if we get a full-scale war in the Middle East, or indeed these recession concerns materialize, then I think that gold is really going to be a big beneficiary in that view, because the broader market is going to flood towards that safe haven currency, or not currency, but safe haven asset, right? Until there's clarity in the Middle East, and until there's clarity in as far as the recession concerns are, and as far as those recession concerns are looking. All right. Just to close that off though, I think that right now we're in the waiting game, guys. All right, markets are going to look for the next big catalyst in order to kind of get some clarity on where the Fed is going and where the U.S. economic outlook is also going. All right, now let's talk about interest rates. All right, where to from here in as far as interest rates concerned? Because I said the market is looking to answer one question or two. How big of a rate cut are we getting in September? And in total, how many rate cuts do we get for this year? And to what extent? Okay? Now, and as far as monetary policy expectations goes, because of that recent weaker data, all right, and these increasing recession fears, traders have kind of altered their rate cut expectations, right? As it stands, the market is pricing in about 105 basis points of interest rate cuts by the end of the year. That's slightly more than 1%, all right? Now, if you're pricing in, or if the market is pricing in 2 interest rate cuts, we need to take the 105 basis points and divide them into 2 Fed meetings. That gives us a 50 in September and maybe a 55 in December, all right, pending the economic situation. Now, if we're expecting 3 interest rate cuts, then we could see small incremental cuts stretched over a longer period. In either way, if we get 105 basis points, the way it's going to be implemented is going to affect markets. If they go boom, boom, 2 big interest rate cuts giving us 105 basis points, that'll really be positive for risk assets and outright bearish for the US dollar, all right? But if they give us still the same amount of 105 basis points, but stretched over a longer period, then I think that might ultimately be bullish for risk assets, but it will take longer and it will be more of a gradual weakening of the dollar as opposed to an outright melting, right? Which is what the Fed wants to see. I don't think they want to melt the dollar. They do, however, want to ease monetary policy to give the economy a much needed lift, all right? Currently, as it stands, though, markets are pricing in with a 65% probability that we could get a 50 basis point interest rate cut in September, all right? Beyond 2024, we're looking at over 200 basis points of interest rate cuts that are priced in for 2025, all right? But that's if only we don't see a deeper recession, all right? That's over 2% in 2024 and 1% for 2024 and 2% for 2025, all right? That's what markets are pricing in currently. All right, let's see. Ankle dollar, what did you say? Let's see. All right. Aiden says the NFP data result for me shows that according to the expectations of the Fed has not gone to plan, so they are drifting further away from their 2% hopes. Well, you are right. You're not the only one that's saying that. And I believe what you want to maybe say is that the Fed could have potentially waited too long to cut interest rates. I think that is the predominant narrative right now, and we're seeing evidence of that because of the melting labor market. Lord Fasad says, Waizi, for time is money, and the daily markets, the daily and the alpha markets is that time. The daily pulse, yes sir. Right. Ray JT says, I think 75 this year, 50 basis points in September and 25 in December. So that is not out of the realms of speculation. You're spot on that one, particularly if we see the jobs numbers begin to normalize and go back to that 170, 180 mark, then I think that Ray is spot on. We could get a 50 in September, and then they might wait and see and just give us a 25 in December. That would be a more measured approach, and that's the sensible approach, actually. So you're spot on. You're spot on. Benji says the Fed wants inflation to come down and stronger economic growth, right? So the Fed wants inflation to come down paired with stronger economic growth. What does the lower NFP and negative unemployment rate mean for the Fed's plan? It simply means that they're going to have to cut faster and to a larger degree in order to stop the labor market from bottoming out, all right? The thing is that when we have the labor market in trouble, it's worse than inflation, all right? Because if people don't have jobs, there's no consumer spending. If there's no consumer spending, we're not just going to see the economy fall off, but we're also going to see the stock market crash as well, all right? And if both those things happen, it's worse than 2.5%, 3% inflation, all right? So I think that what the NFP data does, it backs the corner into a Fed, and they might have to implement emergency cuts or deviate from their plan by giving us cuts to a larger extent than they would have otherwise have planned, all right? I think the plan was giving us 25 in September and then waiting and giving us maybe another 25 in December, all right? But now they're backed into a situation where they have to give us 50 first in September and then assess the economy in October, November, and then decide what to give us in December, right? Whether that be a 25 or another 50 remains to be seen. But long story short, the NFP data has backed them into a corner, and they're now forced to make decisions that they would have otherwise preferred not to make. Great comment there by Benji, as usual. Mafia Loso says, I swear the day the Fed is not quelling, I'll know something's bothering you. For sure, bro, for sure. I dress the way I feel, honestly speaking. You caught that one very, 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 very quickly. I dress the way I feel. So if I feel great, you'll see it in the aesthetic. If I feel shitty, you will see it in the aesthetic. Right. Beyonce says, check DM. All right. Is that my DM or the Alpha Markets DM? Just let me know on that front. All right. All right. Snow for real. Shout out to you as well. All right. So as it stands, guys, like I said, we're expecting with a 65% probability that we're going to get a 50 in September. And then thereafter, it's anybody's guess. It'll depend on the data. All right. The Fed has already told us they're going to be data dependent, and I feel like we should be too, all right? We need to move in lockstep with the Fed on this front, all right? Lastly, let's talk about Middle East tensions, guys. So on the geopolitical front, The US has communicated to Iran and Israel that the conflict in the Middle East should not by any means escalate. All right, that came from the Secretary of State, Antony Blinken. He said that yesterday. And this is even as the Pentagon warns that it's not going to tolerate any attack against any US forces in the region. So they're saying de-escalate, but they say if you attack, we're going to mess you up. It's two conflicting statements, all right? Two conflicting statements. Now, the impact, though, on markets is a bit muted, guys. We had a booming news cycle last week, and now things are a bit muted. After the assassination of Ismail Haniyeh, all right, there's my nigga, Mr. Haniyeh, right? When he was taken out last week, the risks for an escalation did go to the upside, but now it's sort of quiet, and I think, in my view, it's the calm before the storm, right? I think that Iran, Lebanon, and as well as Palestine could come together and decide on a unified attack against Israel and the people that are backing them, which is the US, all right? So I feel like things in Israel right now are a bit shaky. You've got the airports full, you've got electricity blackout warnings, you've got people withdrawing from their banking accounts. So an attack seems imminent from Iran to Israel and from Israel to Iran as well. I think right now it's just about the wait and see that we're looking for. And I think that it's visible in the markets. That rebound we're seeing in the dollar index, I think somewhat is linked to the lack of news. All right, everybody, in the absence of information, everybody is seeing the risks skewed towards an escalation. All right, nobody's talking about a de-escalation. All the rhetoric is about a potential escalation in the conflict. And I think that caution, due to the lack of the news, is what's backing the dollar's current position. All right, and could be the floor that gold that we're seeing. All right, guys. So that's what's happening on the geopolitical front. And as far as news is concerned, we didn't have anything. And as far as high impact news for the US yesterday, so I will omit yesterday. Today we're looking at crude oil inventories. So if you're trading oil, you might want to have a look at that. Tomorrow's the big one in my view, initial jobless claims. Like I said to you guys, all right, initial jobless claims is one of the most important economic data points and as far as the labor market is concerned, right? NFP is the big one. The unemployment rate is massive. But we have to wait another month to assess the labor market if we're going to go by those metrics. The most real-time data we have available to us, guys, is initial jobless claims because it samples weekly, all right? So this week's initial jobless claims is going to be the market mover in my view this week. It is the main event this week. It's WrestleMania for me. And on that front, we're expecting a moderation from 249,000 people losing their jobs that other week to 245,000 only losing their jobs last week. That is still significantly high, particularly if you look at the trend for initial jobless claims across the year. Just to get some perspective, you'll see that claims are sitting at a high level, whereas it mirrors actually the picture that we're seeing on NFP. If you look at NFP, the figure that we got last week represents the lowest figure for the year, all right? We're looking at pandemic levels of employment, all right? Meaning we could be tilting into a recession. And when we tilt into a recession, what is the Fed going to be forced to do? They're going to have to stimulate the economy. How are they going to stimulate it? Massive interest rate cuts. What's that going to benefit? Stocks, risk assets. So guys, now is the time for us to do our homework because I believe that going into the latter half of the year, going into the next 2 to 3 months, no, 2 months, all right, 6 to 8 weeks, the next 6 to 8 weeks are going to be mission critical, all right? This could be the buy position that we've been waiting for, all right? Our job right now is to look for an economic catalyst, a fundamental catalyst that's going to be validated by a good reversal pattern on the technical analysis and as far as the buy side situation is concerned on the risk assets and as far as a sell side situation is concerned on the dollar index. So guys, do your homework, follow the Daily Pulse. Let's ease into this narrative because if we get this right, guys, all right, we're done with almost half of the world. We're done with more than half of the year. One good trade can make the entire year, guys. All right? If we treat this next 6 to 8 weeks the way it should be treated, with the respect that it deserves, and the diligence and the patience and the thoroughness in as far as our price action is concerned, matching it with a proper fundamental catalyst, then I think we've got a winning recipe for holding positive buy-side positions, and as far as risk assets are concerned, well into the year, all right? Because the dollar's going to weaken, guys. It's there, all right? The fat lady has sung, all right? We're getting interest rate cuts, and this recession fear is even exacerbating the extent to which we might get those cuts, all right? So I believe that it's already locked in, it's already fully priced in that we're going to be selling the dollar and buying risk assets. It's just about finding the right price level that matches with the right economic catalyst and the right technical analysis, all right? So we've got our work cut out for us, but I believe if we do it right, it will be more than rewarding, all right? This is M4 season, all right? We're going into the season where we need to be buying new cars. We're going into the season where we need to be buying new houses, all right? Moving out of those apartments, getting bigger apartments, all right? Moving out of that flat, moving into an apartment. Moving out of that apartment, getting a townhouse. Moving to that townhouse, getting a proper house. So this is the season to be leveling up, and the fundamentals and the charts are giving us the perfect opportunity to do it, guys, all right? If we do this right, this might be the one trade that makes the year. And on that note, the fastest 30 minutes online has come to an end, ladies and gentlemen. Thank you so much for joining me. Thank you for keeping the life count above 80, all right? I can see all the regulars are in the house. We're usually averaging between 80 and 95, and I know that those are the daily people that join us. The other 120 only come when there's high impact news, all right? Thank you so much for today, boys and girls, ladies and gentlemen. All right? If that's all, then let me know. Ramsey says, I'm constantly thinking about your yesterday comment. Which one, bro? Which one is that one? Raela Universal says, M4 season for real. I'm telling you guys, it's AMG season. All right, Bearberry says, good session. Shout out. Benji says, that 120 will still blow. Yes, they will, because they're trading blind. All right? They're trading blind. We're not, because we're actually putting in the work, guys. We're always here unpacking this narrative. I always say yesterday, you cannot watch Game of Thrones for the first time and go to season 5, episode 10 and expect to understand what's going on. No. You need to keep following the narrative, evolving with it. And that's what we're doing here every day. All right? Movie Mukuru says, so would it be immature for me to take a buy? It would be in the absence of a catalyst, all right? We don't have a catalyst right now, and there is still room for these risk assets to keep melting, all right? Particularly because of the pattern that I'm seeing on, let me just humor you for a moment, on US 30, not on US 30, I'm lying. Let's look at gold. No, fuck gold. Let's look at US 30. All right, we're looking US 30 on the daily time frame, all right, guys? Daily time frame, US 30, real quick. We're clearly in a range. That's the bottom of the range. That's the high of the range. Market failed to break the low. Boom, market failed to break the high. All right, can you really see? Points of interest have been established. What do you think traders did over there? They sold where their stop losses, above the high. What do you think traders did over there? They sold where their stop losses, above the high. What do you think this price action did? Liquidated everybody who's holding sell side positions. Now we're pulling back. We need to come and validate this level again. All right, so we could still go down, guys. We could still go down. That's why I'm saying don't just be trigger happy and try to buy this dip. We need a reason to buy this dip. Does that make sense? Let me know what you guys think of that technical analysis in the comments down below. But that's what I'm seeing. I'm seeing some potential for further weakness in as far as these risk assets are concerned. And it merges perfectly with what we just analyzed on the dollar index when we began. There's still room for upside potential, all right? This pullback can still go deeper in as far as the DXY is concerned, and it's going to mirror itself on the risk assets to the downside. Let me know if you guys agree or disagree with that one, all right? I'll wait for that answer before I tune out. Mr. Selby23 says, you were born to change lives. Mfanaka. Bro, heartwarming comment, bro. Heartwarming comment. I appreciate that, bro. Panyanisia. Yo. Panyasia Gutumisa. Yeah, bro. Do you want to be a member of what? You want to open a trading account? I need you to specify, all right, what you're looking for, and then I can answer you. All right. Let's see. Let me know what you guys think of that technical analysis, all right? Tato says potential for further bearish movement. I agree. All right. Stocks can still continue to melt. All right. Young Pluto says that's some real fundamentals right there. That's what I'm saying, bro. That's what I'm saying. Brahma Gupta says, what is the direction of gold? Well, and as far as price action is concerned, I'm inclined to be bullish on gold, but damn, these technicals, man, they messing with me. Let me show you what I'm seeing on gold, all right? And as far as price action patterns are concerned, it's looking more like it's looking more like the Dow Jones as well, all right? Daily time frame gold, we're in this range, all right? What do we see there? Same behavior. We set the high, we set the low, we revisited the high. The sellers above this, and their stop loss is located above the level. Where my finger is, there's so many sell side orders. What do we see the market doing? Boom, boom, liquidating everything, coming back down. So I believe this potential reversal pattern, should it break over here, guys, we will melt to the downside and correspond with this trend line. 1, 2, waiting for the third hit over there as well. All right. So the bear case scenario is there for gold, but the bullish scenario is as such. All right. We clearly have a level there. All right. So if we take this down one tick, so now we're on the 4-hour time frame, we can still find support at this level. All right. This is the level we bought at. I think on the back of that dovish FOMC, that's when prices took off, and then we have CPI as well as NFP was somewhere up there. All right, and as far as points of interest are concerned on gold, there is further room for weakness. All right, let me know what you think of that technical analysis on gold. All right, I think that's pretty thorough. Let me know. Forex Kid 2.0 says agreed. Mr. McShane says it would be wise to wait for a pullback, then sell. That's what I'm saying. That's what I'm saying. All right. Movie Mukuru says, makes sense. Thank you. Benji says, best in the city. That's what I'm saying, bro. Shout out, my G. Panyanisa Siagutumisa. Hey, man, Mazulu is pathetic, guys. Yo. Mazulu is pathetic. Please, I apologize. I don't mean to butcher your name. But yeah, if you want to open a trading account, bro, just click on the link in my bio, all right? And it will take you straight to a page where you can register and open your account, all right? Ria Stylebender, same for you, bro. If you want to open a trading account, just go to my page, click on the link in the bio, and do your thing. Quality.